What's going on, everybody? Good morning. Welcome back as I continue this journey on creating a market maker algorithm for the crypto markets. So, today is Monday, March 3rd. Crypto has had an interesting weekend. Trump announced that they're going to potentially create a strategic crypto reserve with all sorts of different coins in it, and the market took off over the weekend and rallied pretty strong. It's been kind of in a downtrend the last couple weeks as people are taking profits after the post-election gains, and got a pretty good bump over the weekend, but now we see that's kind of a lot of the profits are being given back. But anyway, I've been out of the market other than the meme coins that I'm currently short. So I am in the process still of getting trade flow data from Binance. So the good news is that was really easy to hook up and to put into my app. It maybe took about an hour worth of work to plug in the WebSocket data feed from Binance and start piping that trade flow data into the algorithm. Now, what I'm finding is how to interpret this data is going to be the tricky part because it is super noisy. What you'll see is just a flood of buy orders coming in where the buy volume spikes. So these are orders where the buyer is the taker of the liquidity, meaning somebody's crossing the spread to purchase the underlying asset. So typically that would indicate, okay, if buyers start getting more aggressive, likely the price is going to go up, and then vice versa. If you start seeing a flood of market sell orders get executed, you would think that the price then would in turn go down. So what I'm going to start doing, I think, for an initial cut at this is to look at both the buy and sell volume itself over some period of time. I'm probably going to need to apply some sort of filter to that because, like I said, it's just super noisy. It bounces around very, very quickly, and so not going to be really useful in its kind of raw form. So I'll look at applying some sort of filter to that data stream, and then just not only the volume that these orders are generate, but just the number of orders themselves, right? So realistically, if you've got like 3 times more buy orders coming in than sell orders, you might expect the price to go up. So what I'm going to be looking at is like really, at least to start with, some extreme scenarios where the buying or selling pressure just gets super extreme. In those cases, if say the buy pressure gets super extreme and I'm already accumulating inventory, or the strategy is already accumulating inventory, then I might want to either delay putting out any more asks. I might want to pull asks out of the market. I might want to raise them even higher. Just depending on what my current inventory is. So I'm going to look at kind of managing the inventory based on some extreme scenarios first. And then the other thing I want to do is I kind of want to use this as a way to judge the short-term sentiment of the market, right? So if, I'm seeing sustained selling pressure over the past 5 minutes, 10 minutes, 15 minutes, 30 minutes, kind of use these metrics as a way to say, okay, selling pressure has been higher than normal over the last 30 minutes. I want to be a bit more careful about putting my bids out there, right? Because I don't want to get run over if this thing continues heading down in that direction. And so I'm going to couple this with some of the volatility and trend indicators that I'm already using to kind of gauge the sentiment. But I think this should be an interesting these should be interesting data points to use because they're just not readily available in the charts. You're actually having to get this data from the exchange. So, and then I'm kind of curious too, is if there's any way to not even inside the market making algo, but is there any data that can be taken from this and interpreted in a way where you could actually make some directional bets, at least short-term directional bets on the market. So you might be able to, scalp 40, 50 ticks, you know, and because you're gonna, I say scalp and I say 50 ticks, but scalping is usually not that many. But the problem is in the crypto market, you're paying, uh, 30 basis points for commission on a market order. So in order to have a strategy that profits, you're gonna need to at least cover, $30 spread on, at least with Bitcoin. You're paying $30 for every $100,000 you trade. So you need to move at least of $30 just to cover your commission. So anyway, today what I'm going to be working on is, now that I got the data in there, I'm going to basically be looking for some extreme buy and sell cases, and then adjust any new bids or asks that are getting put out there accordingly. And then as soon as that's up and running, I think I'll go ahead and release the next version out into the wild, while I then work on creating kind of a sentiment indicator based on this data as well. So stay tuned. I'll have my next update probably when I've got something up and running out there, and we'll see how it does. The market's been a bit volatile the last week or so. Some pretty wild swings. Bitcoin, I think, was up like almost 10% at one point yesterday, and today we're down about 4% as of right now, and Ethereum's down about 10%. So pretty crazy. Just want to make sure I conserve my capital and I don't go crazy with the position sizes and inventory when the market goes from these low volatility periods to these super high volatility periods.